Good morning. It's Market Day Report. We're ready to kick off another trading week. By the way, final trading week of October. That's right. By the time we get to next Monday, the time will change. End of daylight saving time coming up over the weekend, but don't have to worry about that right now. Right now, let's worry about what happened in the overnight session. Corn market up 6.5, 429 3/4, just a penny off the overnight low or overnight high, and that's where corn is. What about beans? Beans moving up dramatically, up 23 cents, trading 10.64 3/4. What I really want to point out, though, is look at May and July contracts. Those went above $11. Didn't think that was possible before. Well, an announcement over the weekend, and we'll have Brian Hoops tell us more about that in a moment. Wheat market 12.5 higher on the D's at 525. We look over at hard red. You know, hard red has settled higher for 3 straight sessions, up 11.25, 512 3/4. Spring wheat contracts higher across the board. And then over to the cotton market, and cotton in the overnight session up 59, 64.79, 69-cent cotton earlier on the July contract. Brian Hoops, President, Midwest Market Solutions. All right, everything higher, much higher. What's the catalyst?
Well, as you talked earlier this morning with Arlen, it's a trade agreement, or at least the framework for one, with China. That's the big news, and what is really going to drive our prices in here. That's the reason, if you wanted to sell cash beans at harvest, that's the reason you reowned it, is for some sort of an agreement like this. Now, we don't have details. We have a statement saying that they are going to buy a substantial amount of soybeans, and then that soybean farmers will be happy for years to come with this agreement. So we'll see exactly what that means, but the reaction overnight was about as you expected. Soybeans gapped higher, they rallied, they pushed the highest level since mid-June, I believe. We talked earlier last week, Tony, about cash sales, that if soybeans got to $10 on the cash market, a lot of our clients were saying there's going to be a lot of cash sales being made, and apparently that hit in many areas with this jump in prices overnight. There's been a lot of cash movement. Basis is starting to widen back out. So this is probably not the end of this rally for this leg higher here, but we have traded a little bit of it last week. We traded some again overnight. Most likely we'll go back and fill that gap at some point again in the near future. But for now, I think the market wants to be strong. We'll probably have some short covering. Funds are already probably long in soybeans. That's the best estimate because we don't have commitment traders reports. So we won't get as much short covering there, but we could get a lot in corn, a lot in wheat, a lot in soybean meal, where those fund managers are still holding that short. So kudos to the Trump administration for getting this agreement in place. Let's see if we can enforce it and how many products of grains and commodities China is actually going to buy.
Well, and kind of the word was soybean growers will be happy with this agreement. We also had the administration say ranchers will be happy with this. Will they? We'll find out in a moment. Market Day Report continues after this. So live cattle futures have been lower 2 straight sessions. Could we see a 3rd straight? Well, here's how we finished on Friday in lower territory, and locked limit lower on December and beyond, down 7.25. That means expanded limits today for live cattle, $10.75. Feeders, last week in 3 days, some of the contracts lost over $21. Now we settled across the board, locked limit lower, down $9.25. So the new expanded limit today, $13.75. Hog market was lower again last week for the 3rd straight session. I know December and January were higher, but the bulk of that, February, April, and May, lower 3 straight sessions. Brian Hoops, Midwest Market Solutions. All right. This was based upon some possible trade news as well, right?
Yeah, I was sneaking a peek at the bid ask on the live cattle and feeders. Interesting. Sometimes they give you a little, good tendency. Sometimes it's not accurate at all. But December cattle look to open more steady, with February maybe down at least $2 live cattle. Feeders January right now, the bid ask is looking at 8 to 9 lower, which would be a sharp move lower, of course. But the November is more of a steady type opening. So that could change in the next 10 minutes or so before we get to that opening bell. Now, we are going to have expanded limits. I don't expect that we'll trade those expanded limits today. Maybe we get even some sort of a buying interest starting to come back after a sharply lower opening here this morning. But we do look to see some weakness here in follow through. A lot of the trade here is scared and running for the door. And then we're talking about large fund traders that have built this market up and pushed things higher. They are looking to exit these markets, especially the long side of live cattle, feeder cattle here, and push the market to the downside because of concerns about buying and importing products out of Argentina, as well as maybe opening that border to Mexican cattle. So last estimates I had heard, we had about 750,000 animals that could come across the border if it does in fact open up to feeder cattle imports into the United States.
Yeah, absolutely. And we haven't even factored in the idea of Brazil and President Lula, who's signaling we've got trade deal kind of ready to go there. Could that reopen that market for fresh beef? Brian, great to see you. Brian Hoops is president of Midwest Market Solutions.